My name is Ahmed Attiga. I'm the Chief Executive Officer of APICORP, the Arab Petroleum Investments Corporation. And it's my pleasure to moderate and lead this discussion on the MENA Energy Investment Outlook, which is the flagship report of APICORP, the annual publication that we try to forecast the outlook of the energy investment in the region. And my pleasure to have my two colleagues, co-authors of the report, Ramy Al-Ashmawy and Suhail Shatila, who will walk you through the presentation and engage in the discussion. The report was also prepared by our former chief economist, Dr. Layla bin Ali. APICORP, as the only energy-focused multilateral financial institution in the region, has a responsibility both through its financing products and also through its knowledge sharing and research, a responsibility to present to the region both the opportunities and the challenges of the energy transition that the region is going through as part of the global transformation in the sector. And in that context, this particular analysis focuses on the investment side of the sector and how both planned and committed investments for the next 5 years will shape and will contribute to achieving the targets of the energy transition and the overall growth of the region, both exporters of energy and importers of energy in the region. Next slide, please. I will just go over a very brief overview before I give the floor to my colleagues to go through the specifics of the analysis. Just an overview of how we see the region in the midst of an unprecedented crisis, which we named a triple crisis of unprecedented nature, as a matter of fact. We have a health crisis that has hit the globe, basically, the hardest in probably a century. We have an economic crisis manifested mainly for our region in the drop of the oil prices in 2020, and the financial impact of those two crises constitute a magnitude of an unprecedented nature across the region, which has widened the income and the productivity gaps between and within our countries. The region-wide has seen close to, in our estimates, close to 3.4% drop in GDP in 2020, and major drop has also happened in foreign reserves and international and regional FDIs, and also in the sources of income and the sources of growth for many of the countries of the region. For example, those countries that have relied on tourism have seen that that side plummet, be it Morocco or Tunisia or Jordan. We have seen Saudi Arabia affected by about 1.5% decline in GDP. We have seen countries that rely on remittances from abroad have also suffered. So there was a perfect storm, if you will, and each country has decided how to weather this storm. But the common denominator in both in how these countries are still actually struggling with recoveries has been in designing stimulus packages that have been deployed. But with the stimulus packages come a debt burden, and transforming this debt burden into productive uses is a major challenge in how sustainable the recovery can be. And the jury is still out as to how these recoveries will take shape. If we come closer to the energy producers of the region, we will show you in the next few slides and in the analysis that we think it's probably this decade will probably be the last window of opportunity for the low-cost producers in our region to re-establish their market share, particularly Saudi Arabia and Qatar, and to some extent the UAE. In other countries, the level of hydrocarbons exports will remain highly dependent on the recovery of oil and gas prices. Overall, we think that 2021 will exhibit a recovery of the nature that different parts of the economies will recover differently, be it in the time of the recovery, in the magnitude of the recovery, and in the rates of the recovery. This slide, just to finish my my intervention, is only to show that the stimulus packages that I spoke, that I mentioned, mainly the countries have secured the financing through going to the capital debt markets. And the report itself has the details of how each country of the region secured the financing through the capital debt markets. But within this phenomena of relying on the capital debt markets, we saw a clear direction through the green financing. And this is a welcome development in the region, because not only can the countries through green financing attract new type of investors that want the region and the producers of the oil producers of the region to show their seriousness for embracing the ESG framework and the clean and green recovery to be based on this type of financing. So the report talks about how this phenomena is taking shape, not only in financing, but also through the complementary regulations and policy framework that allows for green financing to become a major source for tapping into the capital debt markets. Just wanted to start with this broad framework for the discussion, and I pass the floor now to Ramy and Suhail to start going into each sector specifically.
Thank you, Dr. Ahmed. As we could see with the start of 2021, the globe saw a faster than expected recovery in energy and commodity prices, partly due to the cold snap that was accompanied by last winter, but also due to a boost in immunization activity and vaccines rollout throughout the world, which actually prompted a revision of commodity prices, futures contracts, and even LNG price, spot price forecasts at key hubs. As we can see here, this table on top right shows a comparison between last year's LNG spot price forecasts for the next 5 years and this year's Q1 forecasts, showing a slight improvement, a slight uptick in prices throughout. The same thing if you look a little bit down to the IPICS Global Index, which tracks the petrochemicals, the global petrochemicals. It shows a return to pre-2020 levels, and it actually passed the 2019 mark, which shows that there is a strong demand building on petrochemicals and commodities. Over the medium term and longer terms, there is a consensus within energy experts that liquids demand for petrochemicals will continue to build up. We're here talking about petrochemicals used in industry, in basic materials, also specialty chemicals needed for human civilization. This does not contradict the energy transition goals, and regulations are being designed and devised to make sure that the energy transition also caters for the continuous need for industrial products, consumer products, and so on. We're not talking here about energy used as fuel. We're talking about liquids demand for industry, for petrochemicals and industry. Same thing for natural gas. I mean, the industry is now in consensus as well that natural gas is going to play a crucial role as a transition fuel, given that CCUS is applied on wider scale. Nowadays, we could see global projects, not only for example, in Qatar, LNG expansion that has CCUS integrated within the project, but also the US shale patch is now considering applying CCUS to make sure that their accomplishments and their vast production from both oil and natural gas does not impact the environment and plays more into ESG, as Dr. Ahmed was mentioning. Caters for the environmental aspect, social aspects. They claim that since the US shale took off, it provided jobs for millions of US citizens, tax money from companies working as developers or service companies, and so on. However, we see that the US shale is no longer an area of growth for oil field service companies. And we are seeing a bit of movement or migration from at least the big ones to other areas, on top of which is the Middle East and North Africa region, as the region starts to develop its own shale resources, unconventionals generally, particularly gas. For our investment outlook for this year, which is the 5-year investment outlook, we see a very shy increase vis-a-vis last year's. Last year's outlook was already impacted by the combined crisis of 2020, so it was even lower than the 2019 outlook. And we are seeing a stabilization of investments for 5-year forward-looking, and this shows the ramifications of 2020, the lingering ramifications of 2020 on the region. However, compared to the globe, the region still has strong resilience and showed in a healthy volume of energy sector investments. The chart down below on the down right side of the slide shows that the committed MENA investments to total are the lowest since our 5-year outlooks from 2018. And this is a testament, again, to the fiscal pressures that the countries are facing, prioritizations that are going on, and rationalization of investments throughout the spectrum, either be it in oil or gas or power or chemicals. Power actually leads the investments in terms of net change versus last year's outlook, and also magnitude, and that is a remarkable sign. So for the first time in a region that is well known for oil and gas and contributes a big portion of the global oil and gas production and exports, power investments top oil and gas investments. This is mainly attributed to the drive for more domestic needs for socioeconomic development, industrialization, and so on. So with the exception of oil capacity increase in the UAE, which have an uncompromised target of 5 million barrels of oil per day by 2030, we see that that oil year-on-year oil investments are slightly decreased, both in committed and planned investments. Petrochemicals, you see the parity in petrochemicals from planned and committed. Committed petrochemicals fall, planned investments increase. And this shows that the region still has the appetite from previous years to capitalize and to go forward with downstream integration and more value chain usage of its wealth of oil and gas resources. However, rationalization is taking place. We see that rationalization is focusing on cost efficiencies, operating efficiencies, and establishing synergies rather than pure expansionist mode that has been going on in the last years. Gas remains stable, so you can see that with several mega projects coming into production and completed in the last 1 year and first quarter of 2021, we see also a healthy level of planned investments, on top of which Qatar's giant NFE plays a big role. Saudi Arabia, Iraq, the UAE, and Egypt contribute about more than half of the total investments committed and planned in the region for the next 5 years. Due to obvious reasons, Saudi Arabia has a strong drive for utilizing its gas resources, power development, distribution, renewables as well, that my colleague Suhail will take you to a deep dive into. Iraq is trying to catch up with its huge pipeline of projects in all aspects, but mainly in power and gas, either gas capture, gas processing, and gas to power. The UAE moves on with its ambitious plans in achieving its 5 million barrel per day oil capacity, but also petrochemicals and natural gas. We saw that 2020 Q4 of 2020 had the first production from Ruwais Liab unconventional gas. So now UAE joins Oman in producing unconventional gas resources. Egypt also has its strong pipeline of infrastructure and mega projects, modernization of power networks, continuing its gas developments mid and downstream. However, they're taking a bit of a pause now, and the focus is more on a holistic energy perspective, and so is happening with the UAE. A metric that we like to measure and assess is always the private sector contribution to total investments. This shows how the private sector is being more engaged, and also the level of regulations and incentives provided by governments to increase the non-government share, creating more jobs, building resilience in the economy and diversification. And we see that private sector component for this 5-year outlook is increasing threefold, from almost 9% to 27%. And in the GCC, it's coming from 12% to 21%, a testament to the increased importance that governments see in private sector involvement and its effect to building economic resilience, diversification, and job creation. As I mentioned briefly, oil will continue to be a fundamental player in the energy spectrum of the MENA region. However, some expansion projects have been put on hold, tentative to how the global market will recover. Gas is plateauing as several mega projects reach completion in 2020. With the exception of Qatar's giant NFE project and the plethora of Iraq's gas to power, the rest of gas projects somehow falter and remain in tentative mode, as seen from the volume of planned gas investments versus committed gas investments. Power is gaining even higher prominence, as also demonstrated in our power outlook in December 2020. So power is gaining higher traction in the region, and mainly thanks to renewables. The region hit a jackpot with renewables, abundance of sunshine, resources to develop, and the appetite to capitalize the region's competitiveness in renewables. So the renewables boom started with non-oil exporters, now is being led by oil exporters. And this is a huge shift, and the region altogether is marching towards a more renewables penetration into the energy mix, and even aspires to export renewables through different projects. Suhail will take you through a deep dive in power and renewables. In our outlook, in the document, we show the top projects in each sector. So this is just a caption that you can refer to the document for a detailed population of projects in each country that constitute the next 5 years pipeline of energy projects. Iraq is continuing with its oil field developments. Oil is the cornerstone of the Iraqi government revenue. So is for Kurdistan. UAE, we spoke about this. The Kingdom of Saudi Arabia, of course, a top oil exporter, or the top oil exporter now, has oil as its cornerstone in the energy domain. For Egypt, the challenge is to arrest the declines in its aging oil fields. The country is struggling in this aspect and is hoping to incentivize independence to grab mature oil fields and boost or arrest declines. Algeria's new hydrocarbon law it also needs some further regulatory enhancements downstream to put it into full effect. We are not seeing the hoped for FDI involvement in Algeria oil and gas sector generally. This year's outlook, has the benefit of welcoming Libya again into the analysis, since the breakthrough in forming a unity government. Libya has few planned projects that are welcomed into this 5 years outlook. However, once things materialize, I expect that next year's outlook will feature more more than 50 to 60 billion dollars of Libyan projects, either in oil or natural gas, compensating for the lost years that the sector has been dormant. For natural gas, particular emphasis on the Qatar NFE mega project is its green credentials. Nowadays, oil and gas producers are trying to cope with the energy transition. And as Dr. Ahmed mentioned in the introduction, this is the last decade for the top oil and gas producers and the region to set its foot into the next decades. Qatar is demonstrating this. They are developing a state-of-art CCUS facility along with its LNG trains to capture carbon, capture GHG emissions, and utilize the associated gases to produce industrial quantities of helium, sulfur, and ammonia. Saudi Arabia stated in the first quarter of 2021 that their massive Jafurah unconventional gas development will be catering production of blue hydrogen. So we can see that the region is acknowledging energy transition, acknowledging ESG, acknowledging net zero targets, global net zero targets, and wants to maintain its well-deserved market share in the global energy market. The UAE also earmarked several $billion. That was a statement in Q2 2021, a very recent statement, that they earmarked several $billion for decreasing the carbon impact of their oil production. For Iraq, the Iraqi government has managed to circumvent the fiscal tightness and the fiscal pressure accompanied by the social and political instability, and actually moving forward with multi-billion-dollar gas agreements this year. And this is a very welcome development, and yet it can be seen that some of or a portion of the Iraqi projects might be delayed. That is understandable. But the emphasis is that even Iraq is capturing vented and flared gas, using it into power generation. And I expect that in the next years, we will see that Iraq also will join the renewables boom in power generation. The region altogether has huge potential in this regard. The petrochemicals. While petrochemicals were seeing an unfaltered growth in last year's outlook, the events of 2020 and the shift and the evolution of the global petrochemicals market have prompted a lot of the developers in the region to reassess greenfield projects. The evolution and the changes do not only relate to demand erosion or the pause on the slowdown in economic activity. They also relate to the regulations related to energy transition and net zero that are impacting the petrochemical producers hardest. We are seeing carbon tax implications in Europe, in Japan. I was just reading 2 days ago that a Japanese utility provider will now start providing consumers in Japan with net zero power. So the energy transition is taking the globe very quickly, and producers are very, very alert to this. Nobody will want to see billions of capital spent unwisely. 2020 also showed us that flexibility in product mix of petrochemical plants showed great resilience to economic downturn. Reconfigurable plants fared much better than plants that were only focusing on static product mix. For power projects, we see that Saudi Arabia continues with its very strong drive of power projects development. Egypt, although with surplus capacity now, is focusing on modernizing the grid, grid integration of renewables, increasing reliability of the grid, and also investing in interconnections, as the surplus electricity needs to be exported somewhere. My colleague Suhail will shed more light onto interconnectivity between MENA countries and how this is of essence. The UAE started commercial production of power from its nuclear power plants, and yet continues to develop its gas to power projects and even waste energy to power. Demonstrating also piloting circular economy and ESG credentials. Iraq has the highest level of committed power projects, as we mentioned. And regardless, I mean, throughout the region, it's possible to see postponements of committed power projects for the next 2 years, as the recovery situation remains a bit delicate, as Dr. Ahmed mentioned in the introduction. A very welcome notice is that renewable projects are taking a higher share now of the total investments in each country in power sector. Although varied, so in some countries, renewables constitute almost the majority or all of the investments. But even in in conventional oil and gas exporters, we are seeing this as a very, very welcome trend, and showing their acceptance, the oil and gas exporters' acceptance of acknowledgement, of energy transition, ESG targets, environmental impact, and also commercially capitalizing on the wealth of renewables that the region can accomplish. We have been seeing some of the lowest bids in solar PV. I will leave now the floor to Suhail to take us in depth through power and renewables. Thank you very much.
Thank you, Ramy. Thank you, Dr. Ahmed, for the introduction. If Ramy, you can switch to the next slide, please. Yeah. So talking about the power sector in the MENA region, the first theme that we wanted to highlight in the investment outlook is the concept of renewables. But during 2020, renewables started to gain more traction in the MENA, as more countries started to accelerate the renewables programs in order to reach their short-term targets. This was driven by the need to decarbonize and electrify the economies. Now, several MENA countries are integrating renewables as indispensable part of the generation mix, as a shared policy objective to diversify the supply mix and as well to ensure a security of supply. As a result of that, renewables started to claim a higher share of the power generation mix in several MENA countries, and that was noticeable mainly in UAE, Egypt, Morocco, and Jordan as of 2019-2020. This increase in renewables, no, Ramy, if you can stay on that slide, please. Yes, the increase in renewables was mainly driven by solar PV, wind, and hydropower. It is expected that the region will add 3 gigawatts of renewables this year and around 20 gigawatts over the next 5 years. Now, the only issue with renewables, the issue of intermittency, as most of you know, and the lack of having utility-scale grid storage solution to date. So for the MENA region, for the medium term, at least for the medium term, fossil fuels and nuclear will remain indispensable part of the power supply mix for the foreseeable future. In the next slide, as Ramy said, in our outlook, we have exhaustive lists of the top projects for the upcoming 5 years in each country and in each sector. Here, I wanted to highlight that for the power sector, as you can see, the top projects in most MENA countries are renewables projects. If you can see in Saudi Arabia, for example, REPDO rounds 1, 2, and 3. In the UAE, the MBR solar parks phase 4. In Kuwait, the Shagaya phase 2 and 3. In Qatar, the Kharsa solar PV project. In Oman, the Adam and Manah solar PV projects. In Iraq, the Karbala solar PV project. And renewable energy projects in Egypt and in Algeria. So if you want to look at the whole list of projects containing conventional and non-conventional power, it's good to take a look at our outlook. In the appendix, we have the full list of projects. Now, another topic that we felt that it was very important to address, and it is very much related to renewables, it is the topic of energy storage. And with the need to scale up renewables and investing in upgrading networks, the expanding share of renewables and the growth in power demand and balancing the supply and demand on a real-time basis necessitates having an energy storage solution. The key driver for the energy storage is to optimize the location of renewable energy production facilities with the energy storage assets. This stabilizes the production and ensures firmer capacity during peak demand load. Here, when we are talking about energy storage, we are focusing on the in front of the meter energy storage solution and not behind the meter. That is closer to the generation side of the value chain. Now, we should keep in mind that energy storage is just one solution to enhance the flexibility of the power networks, optimizing, of course, other features of the power network, such as demand response, smart grids, upgrading power plants, will also enhance the flexibility of the network. Now, from a technological perspective, if you can stay, Ramy, on the slide, from a technological perspective, lithium-ion batteries will dominate the energy storage landscape for at least this decade because of their low cost. However, installing an energy storage solution front of the meter and scaling up renewables, this necessitates storage solution with a longer duration and with bulk storage, which the lithium-ion batteries still now do not provide. So until that solution is catered for by batteries, a new technological advancement is needed by the industry, and the most important candidate is a chemical storage solution through hydrogen, ammonia, or methanol. Now, MENA might emerge as a hotspot for an energy storage market, but the role of storage in the networks remains very limited, and regulations will need to evolve to reflect these new functions. In the next slide, of course, Ramy, if you can switch to the next slide. Also here, we wanted to talk about the regional interconnections, because power trading through regional interconnections improves system reliability, reduces reserve margins, exploits daily and seasonal peak load disparities, and of course, the most important is that it cuts the amount of investment needed for new capacity additions, especially for the financially distressed countries. Currently, we have 3 regional interconnections in MENA. We have the Maghreb interconnection, the Levant interconnection, and the Gcc interconnection. Now, the power trade remains very modest among these regional interconnections due to the lack of enabling regulations and lack of proper market signals. For the Maghreb interconnection, institutional and regulatory reforms we put forward, as the power trade between the North African countries is very limited. As for the Levant network, the transmission and distribution infrastructures need to be reinforced to augment trading capacities, given the power deficits in several Levant countries, such as Lebanon and Iraq. Now, most GCC and North African countries are experiencing power supply surplus, and whereas several countries in the Levant region, for example, have a power deficit. So it only makes sense that the excess power to be exported to the Levant region from both the North African grid and the GCC grid. And of course, the North African grid has a competitive advantage to export electricity to Europe if the prices are competitive enough. The final theme that we wanted to tackle in the power section, in the next slide, is the issue of hydrogen, basically. So the combination of the low-cost gas resources and low-cost renewable resources in the MENA region promotes it as being a candidate for becoming a major hydrogen exporting region, whether it is blue hydrogen or green hydrogen. A few countries in the MENA region have taken measurable steps to position themselves as low-cost exporters of blue and green hydrogen, net zero ammonia, and other low-carbon products. Relatively low natural gas prices advantages blue hydrogen for the medium term. However, as the cost of electrolyzers drops, green hydrogen becomes more competitive, and in the longer term, green hydrogen will start to dominate the hydrogen market. I will talk about some market updates in Saudi Arabia and the UAE because they are, in these two countries, actual projects are taking place as of now. In Saudi Arabia, as of last year, a 40-ton blue ammonia shipment was exported via Saudi Aramco in collaboration with SABIC to Japan. And on a larger scale, there are plans by Air Products in collaboration with Aqua Power to build a 1.2 million ton per annum green hydrogen production facility powered by 4 gigawatts of renewable power, solar and wind. As for the UAE, following the MOU which was signed between DEWA and Siemens last year, this was translated in the inauguration of the first green hydrogen production facility last week with a small capacity of 20 kilograms of hydrogen. However, ADNOC has plans of building big blue ammonia production facilities in Ruwais in Abu Dhabi with a capacity of 1 million ton per annum. Also in UAE's Khalifa Industrial Zone in Abu Dhabi, or KIZAD, also there is a plan to build a 200,000 ton per annum of green hydrogen facility, which will be powered by 800 megawatt of solar power. By this, we conclude. I conclude the power section, and I give the floor back to you, Dr. Ahmed, to discuss the key takeaways and open the floor for Q&A, if any. Thank you.
Thank you very much, Ramy and Suhail, for this comprehensive overview of the status of the energy investments in the region, as we see it from the numbers that we have analyzed. I think the takeaways more or less have been covered in the discussion. So I would take advantage of the 10 minutes remaining and go to the questions and answers. I think people have submitted, the audience has submitted questions. So let's look at them. Ramy, can you please comment on the methodology that we use to generate our investment outlook? There are 2 questions on that. And yes, we do have a methodology that we try to improve every year. But Ramy, can you quickly please shed light on this?
So we maintain our live database of projects throughout the region. We classify projects into committed projects, which are post-FID phase, and planned projects which are all projects pre-FID status. So anything that is under study mode, planned mode, master plan, FEED, front-end engineering and design, tendering phase. So anything that is not under execution is planned. We also validate, we continuously validate our database in light of industry announcements, market realities, and we, in the end, apply a qualitative risk factor on the developments of some of the projects, like what happens with the, like what we demonstrated in Iraq. Some of the projects in Iraq have a higher chance of success or continuation than others. So that is more in a nutshell, and quickly to move to other questions. That is our methodology.
Okay. On the green, on the Qatar green credentials, Ramy, you've talked about Qatar focusing on their green credentials, particularly in the gas sector.
Yes, the gentleman or the lady is asking or is mentioning the green premium in the market. So the green premium is going to be relevant in the short to medium term, but long term wise, as per the global market and the global energy transition, green credentials will become a necessity. So yes, for now it is a luxury that some of the consumers or the off-takers ask for green LNG or what the industry now is trying to develop will become a necessity in future. And as you said, Dr. Ahmed, as you mentioned, this is the last decade for top exporters in the MENA region, whether oil or gas, to set their foot into the next decades. So Qatar is demonstrating this. Saudi Arabia is demonstrating this with the blue hydrogen. The UAE is demonstrating this with decarbonizing its oil production. Suhail was mentioning also some of the petrochemical plants now integrating blue streams, blue ammonia, blue hydrogen, blue petrochemical products. So it is becoming, it's shifting from a premium to a requirement in the longer term.
Okay, thank you. Mr. Yasser has asked a question on the expectation for investments for carbon capture projects in the MENA region as a solution.
Again, it's becoming a necessity. What would you think of as either a public or private sector producer or exporter? If you are a public sector entity that owns petrochemical plants, you would be faced with GHG emissions restrictions. You would be faced with carbon restrictions on a state level. So polluters will pay penalties, or and carbon credits will not be a thing of choice. This is what we are seeing developing for the next decade, at least. So the last decade that we are seeing these carbon credits and carbon restrictions, GHG restrictions taken as a take or leave is in the short to medium term. Long term, they will be required to stay in business. As a private investor, you would want to maintain and to grow your market share and not to diminish your market share. If your off-takers and import markets outside the region have a border tax, a border carbon tax, if they have a border restriction that you will be in violation of, nobody is going to purchase from you. You will lose your competitive advantage. Even if you are selling cheaper, at a certain point, cheaper will be irrelevant, because it will become a requirement, a necessity. And this is where, Dr. Ahmed, I would like to shed some light on the certification, standardization, measurement industry that is now starting to thrive under ESG requirements, where we are now seeing global consultancies establishing their presence in ESG domain. We are seeing major oil and gas and petrochemical players actually even partnering in pilot projects in Europe to demonstrate net zero operations and net zero processes. SABIC is partnering with BP in a German petrochemicals plant to produce net zero compliant plastic. So the technology transfer in this aspect is paramount.
Okay.
Thank you.
The duck curve problem is one that has become an issue as more solar power has come online. This is a phenomenon. This phenomenon has become more problematic. Suhail, how is the region addressing this problem of the gap between the demand and the renewable production?
Yes, so as the MENA region is adding renewable, the focus is mainly on the generation side and to add power to the grid. When it comes to the demand, there is a strong growth in the demand. There has always been a strong growth in power demand in the MENA region. But now the thing is that it has been catered for by renewable energy sources in order to decarbonize the economies, to diversify the supply mix, and not be fully dependent on natural gas or oil for securing that power demand. I'm not sure if I understand the question correctly, the gap between supply and demand.
No, it's basically the duck curve shows the difference in electricity demand on the grid and the amount of the available solar energy throughout the day.
Okay.
And that's why renewable has an issue in that. So is the region doing anything about it?
So far, the issue is that there is curtailment of renewable energy sources. So when it reaches a certain aspect, the generation stops at a certain level. That's why we wanted to talk about energy storage solutions, because that will take advantage of the excess renewable energy that is being produced for solar during the day or for wind during the windy season, and therefore store this excess energy and reuse it at times when we have peak loads. So far, with the absence of a utility scale, grid storage solution, energy storage solution to date, curtailment is the only measure that's being taken. And for the MENA region, still the scalability of renewable energy sources are still on the way. So we're not seeing multi-gigawatt renewable energy projects. They are picking up as we go in time.
Okay, nuclear ZIS. Nuclear is something that is a source in the energy mix that some countries of the region have started to look at closely. The UAE, I think, is advanced in this regard. However, my personal view is that it will take time before this source in the energy mix will become desirable for different economic, political, and other reasons. So I think the jury is still out, and I don't anticipate any quick advancement in this regard. Let's take the question.
There's a question about spot prices and long-term contracts, Dr. Ahmed.
Yes, go ahead.
May I answer this?
Yeah,
just to clear the confusion. In the region, the gas exporters have a mix of profiles. Algeria and Qatar have mostly contracted gas. Egypt, however, have almost all its LNG capacity as spot gas, is sold as spot cargoes. However, to show the increased or decreased optimism, you track the spot prices and the spot price forecasts. For example, when there was a spike in gas demand last winter, you could see that spot prices are the ones that spiked. Contract gas is by definition on a fixed band of prices and usually linked to Brent price or WTI for US LNG or such. However, expiring contracts, when they are renegotiated or extended under the or during an era of optimism and increased spot price forecasts are affected. When you are negotiating a contract and there is optimism and there is an uptick in spot prices, the price band of the contract tends to go higher as well. And we could see this with the renewal of some Qatari contracts and Algerian contracts during Q4 2020 and particularly in Q1 2021. Thank you very much.
Okay, a question on the gigawatt capacity, Suhail. Do you see it?
Yes. Well, we didn't calculate how much total power each country will be adding over the next 5 years, but we have a figure on renewables. So, however, globally, I can give a view that renewables is expected to constitute around 30% of power capacity, total power capacity additions. That's the global average. And I think in the MENA region, we are still below that 30% target, maybe 10, 15% on aggregate for the total MENA countries. As gigawatts, we haven't calculated that number, but that's the global scene at least.
Okay.
There is a question on green premiums again, Dr. Ahmed, from our dear colleagues in OAPIC. May I address this question, please?
Go ahead.
Yes, green premiums for LNG. Now, again, I reiterate that now they are seen as premiums. What is now being seen as premium will, by the end of the decade, become necessary or will become the de facto standard. Of course, you will always have black markets, and black markets are not bound by standards. But we are here talking about global and top globe producers of LNG. We're talking about Qatar. We're talking about Algeria, that is a dominant African LNG exporter and generally natural gas exporter through subsea pipelines to Europe. So we are seeing that it's inevitable that these exporters from the MENA region will have to pay the price of the ESG aspect and the net zero aspect in their LNG production. How this will happen is yet to be seen, but we could see that there is already the economics of, for example, the Qatar LNG expansion. The economics take into account CCUS. Why has this happened? Because they know that it's becoming a necessity and it's becoming a global standard if you want to maintain your lion share of LNG exports. If you want to dominate LNG top status exporter, you will have to go with what is developing as a world standard. Algeria will have to do the same. Egypt will have to do the same in order to keep their market shares. Thank you.
Thank you. I think we will, there were two questions on the chat box that I am looking at here, one on Kuwait and one on the ROI on renewables. On Kuwait, yes, the fiscal space and the fiscal deficit that has been caused in Kuwait in particular has been much higher, as the question suggests, much higher than expected, much higher than what Kuwait has shown in the past, for different reasons. I think the drop in the oil price compared to the expenditure side was quite impactful, and a series of other reasons that has made the fiscal space of Kuwait very tight. There are also some legislative constraints in terms of how to use the general reserves of Kuwait, and also the reserves that are in the sovereign wealth fund side that requires changes of laws, and that has also further exacerbated the fiscal tightness that Kuwait is facing. I think they have, or I think they will come to the market, debt capital market soon, to issue bonds, and some of their larger projects in the sector have been affected. They also are looking into schemes of monetizing their pipelines and energy assets, similar to what Saudi Arabia has started to do. Last question on the chat box is on the ROI on the renewable. Suhail, what has been the average ROIs in the region in this sector?
Yes. Well, historically, it has been known that the ROIs on renewables projects were much less than that of conventional projects, and historically they were less than 10%. Currently, it is, of course, each project has its own ROI depending on the financing structure, how much debt, how much equity, the cost of debt and the cost of equity. But maybe we are looking at 4, 5%, maybe 6%. That would be, I say, the average for the renewables ROIs in the region.
Okay, I think, are we done with the questions, or is there any? There's one last question from an anonymous. Do you see the Middle East gaining greater market share as ESG pressures go on Western? Well, the region will also embrace ESG standards. So it's not either or. The region will, and many of the projects that my colleagues have indicated are projects both in the petroleum and in the wider energy sector that embraces ESG, embraces a cleaner and a greener and a low-cost production of hydrocarbon. So I think the pressure or the discipline in this regard in the region, you will see much more of going forward as part of the energy transition requirements and aspirations. The interregional gas trade has been weak in the MENA region. Why, Ramy?
Sorry, sir.
There's a question on why has interregional gas trade been so weak in the MENA region?
Interregional gas trade is a very thorny question. We like to address things from more technical and economic and commercial aspects. So putting aside all the politics involved, there are political factors, but I will just go back a little bit in history. Gas has been flowing constantly through the Arab gas pipeline. The Arab gas pipeline starts from Egypt via Jordan and then goes to Syria. There was an upgrade link that was supposed to go to Lebanon. Due to the obvious reasons, this upgrade was not successful or did not materialize. So the gas offtake from Egypt to Jordan has been flowing. Again, due to political reasons and due to the advancements that Jordan accomplished in renewable energy, some of the gas that was needed by Jordan was no longer needed. Similarly, or taking a bit of different flair with the GCC interconnection, we have a private project or a quasi-private project, and we have the GCC interconnection. The quasi-private project is the Dolphin Pipeline. The Dolphin Pipeline has been working in full swing and was not interrupted or has not seen any decrease in volumes, even throughout, even during the impasse that took the GCC countries, and that was recently resolved. So we could see that actually the GCC took or was handling gas trade as with a pure business perspective, and that was very, very worth noting. It was not subject to politics. Dolphin Pipeline flows from Qatar to UAE and Oman. We're going uninterrupted, and that is to be taken as a role model. In the case of North Africa, the same thing happened with Algeria and Morocco. We know that there is the link from Algeria to Morocco, and then some of it going again to Europe, so via Morocco. So volumes of gas off taken by Morocco are uninterrupted. The region can do more. The region can definitely do more, but again, it is subject to lots of aspects, part of which are political, and we like to keep focus on the technical, commercial, economic aspects.
Okay, final question on the ESG, how it will be applied in the region. Definitely the region will have to strike the right balance between embracing and introducing all the requirements of having an ESG focused investments, be it in the hydrocarbon and fossil fuel or the wider energy sphere, a balance between that and the fact that the region will remain reliant on fossil fuel as a key ingredient of the energy mix. The two are not contradictory in my view, and basically the policies and the regulations and the framework for the energy transition that the region will develop, both producers and importers of energy, this framework will have to show this balance. And this is how the governments of the region and the NOCs of the region are positioning this is how they are basically trying to achieve. Okay, I think we have taken a lot of everybody's time. I hope this was a useful session. If there are any more questions, we will take note of them and send the answers to those who ask them. We will be doing more of these webinars as we move through our publications this year. There will be, I think, a forthcoming publication on the storage. There will be another publication on this balance of how the ESG will be applied, a very important strategic and policy area. And we will do a webinar on each of these themes or each of these subjects. Thank you very much for your attendance. I hope this was useful. We will continue to engage. I think there will be a recording of the session that the coordinator will send to everyone, and the paper itself that we covered today, you can find it on APICORP's website as well. I thank my colleagues and I thank everybody. Shukran. إلى اللقاء.